Good day. Welcome to another section of AE Accounting Tutorials. We are continuing our series on accounting for hire purchases. In this video, we will be taking a full practice question where we will be required to account for a transaction in the book of a hire vendor. That is, we will be required to make an accounting arrangement in the book of a hire vendor. But before we take the question, I would like to take you through some basic key areas you need to understand when you are making accounting arrangement in the book of a hire vendor. Okay, so in a hire purchase contract or in a hire purchases agreement, the item being sold out on hire purchase contract, okay, it is an item of sale to the hire vendor and an asset to the hire purchaser. Okay, because it is an item of sale to the hire vendor, we open a sale account. Okay, that is hire purchase sales account in the book of the hire vendor. On the other hand, in the book of the hire purchaser, we open an asset account because it is an asset to the hire purchaser. Is this clear? But remember that we are making an accounting arrangement in the book of a hire vendor. Okay, but in the book of the hire vendor, the hire purchaser is a debtor to the hire vendor. Is that okay? Because of this, we need to open the hire purchasers account in the book of the hire vendor to record all amounts owned, all initial deposits, all interest components, and all installments in the hire purchasers account. That is in the book of the hire vendor. Is this clear? And all this accounting arrangement will be explained into details when we are solving the question together. And also, an interest received account must be opened. And this hire purchase interest received account will be credited because it is an income. Okay, and at the end of the period, it will be transferred to a hire purchase trading account. Okay, and the sale or the cost price of the asset or the cost price of the item being sold out will be transferred to the hire purchase trading account as well. Okay, and the sale price of the asset or the item will also be transferred to a hire purchase trading account in order to determine the gross profit on the sales being made. Is this clear? But remember, we will be looking at the concept of provision for unrealized profit on the gross profits. Okay, and this concept will be explained when we are solving the question. So let's quickly go through the question together and try to solve it to enhance our understanding on the accounting arrangements in the book of the hire vendor. Okay, so Job Brewery Limited wishes to expand its production line and have purchased a new packaging line from Never Again Engineering Limited on hire purchase terms at 1st January 2019. The list price of the line was disclosed by Never Again Engineering Limited was 54,000 Ghana cedis. The hire purchase agreement provided that Joe Limited would pay a deposit of 9,000 Ghana cedis on 1st January 2019 and two annual installments of 24,000 Ghana cedis on 31st December 2019, 2020, and a final installment of 20,391 Ghana cedis on 31st December 2021. The true rate of interest is 25% per annum. The depreciation policy of Joe Brewery Limited is to write off the line to nil value over 10 years on straight line basis. The total cost of manufacturing the line to Never Again Engineering Limited was 43,200 Ghana cedis. Required. Account for the above transaction in the book of Never Again Engineering Limited. Okay, so in this question, there are key things you need to take note of. Is that okay? That is the cost cash price of the asset, okay, or the selling price of the asset. You have to take note of it. And the annual installment payment, okay, it will be taken into consideration. Is this clear? But remember that there is a depreciation policy in this question. But note, in the book of the hire vendor, because we are accounting for the transaction in the book of a hire vendor, the item being sold out is an item of sale, not an asset. So we will not tackle the depreciation aspects, okay, because the item being sold out is an item of sale, not an asset. So take note, we only consider the depreciation when we are making an accounting arrangement in the book of the hire purchaser. Is this clear? So to begin with the solution, the first question you need to ask yourself, are we making the accounting arrangement in the book of the hire vendor or the hire purchaser? But from this question, Never Again Engineering Limited is a hire vendor. So we are making accounting arrangements in the book of a hire vendor. Never Again Engineering. Okay, so the name of the hire vendor. So Never Again Engineering. So we are making the accounting arrangements in the book of Never Again Engineering, the hire vendor. Okay, so the first account we will consider here is the hire purchase sales account. Okay, so we open the hire purchase sales account. First of all, let me open that here and open Joe Limited account over here. Okay, Joe Limited is a debtor to Never Again Engineering. So we open Joe Limited account. Okay. Then we come to open sales account. Okay, so that is HP sales account. HP means hire purchase sales account. Very good. After this, the next account we'll be looking at is the hire purchase interest received account. Is this clear? So we also look at the hire purchase interest received account. So HP interest received account. And this hire purchase interest received account is an income account. Okay, so I bring my currency signs. All right, so from the question, the list price of the packaging line is 54,000. Okay, so the item is being sold out at a cost of 54,000. So we will credit the hire purchase sales account and debit Joe Limited account, because the Joe Limited here becomes the hire purchaser, that is the debtor to the Never Again Engineering. So that is on first, that is 2019, but 1st of January. Okay, and in the book of Joe Limited, and the amount is 54,000. Then we debit Joe Limited account in the name of hire purchase sales. So hire purchase sales, an amount of 54,000. But remember, the same 2019, that is 1st January. Okay, so we are done with recording the cash cost price of the assets. Is that okay? And remember that from the question, there is initial deposit on 1st January 2019. Okay, anytime a deposit is being made, okay, the deposit is being made by the debtor to reduce his or her account balance. So on the same 2019, on 1st January, there was a deposit. Okay, a deposit of an amount of is 9,000. And we are crediting the Joe Limited account or the debtors account because we want to reduce its debt. Is that okay? Good. And the corresponding entry of this account will be the bank account of Never Again Engineering. We debit bank account of Never Again Engineering and credit Joe Limited. But the bank account over here is not relevant, so we won't open it. Okay. And remember that at the close of every period, we need to calculate interest on the remaining balance on Joe Limited account. That is the debtors account. We calculate interest on the remaining balance. Okay. And interests are calculated at the end of the year. Remember, an annual installment is made, but this installment is also made at the end of the year. So for 31st December, there is an installment, okay? An installment of 24,000. Is this clear? An installment of 24,000. We are crediting because we want to reduce the debt, okay? So we credit Joe Limited account and debit the bank account of Never Again, okay? So now at the end of the period, we need to calculate the interest components, okay, on the remaining balance. But remember, this amount is being paid at the end of the year. So in order to determine the remaining balance at the end of the 2019, what we do is that we take the cash cost price minus the bank deposit at 1st January, that is 9,000, and this will give us 45,000. Is this clear? And with this 45,000, we calculate the interest, that is 25% on it, and 25% on this amount will give us 11,250. And this 11,250, it is also an amount that's supposed to be paid by Joe Limited account or Joe Limited. So we debit his account, that is on 31st of December, with high purchase interest. High purchase interest. And the amount is 11,250. This will give us 11,250. But remember that this high purchase interest is an income to Never Again Engineering, okay? So it's supposed to be credited to high purchase interest receive account. So on 31st of December, that is 2019, from Joe Limited, okay? Joe Limited, and the amount is 11,250 Ghana cedis as an interest received, okay? Now we have to close this account, okay? So by closing this account, we sum it up, okay? So by summing, the debit side is bigger, that is 65,250. The debit credit will also be 65,250. All right. So the balance on this account, that will be on 31st December. The balance carried down will be an amount of 32,250. So 32,250. So this is the balance carried down at the end of 2019. Now we move to 2020. So 2020. So this balance carried down becomes the balance brought down. That is on 1st of January, we have the balance brought down of 32,250. Is this clear? Good. And in the year 2020, there was another annual installment of an amount of 24,000 Ghana cedis. So the installment is on 31st of December, and this is another installment. I told you we credit the installment in order to reduce the debtors balance or Joe Limited balance, okay? And the amount is 24,000. So at the end of the year, we have to determine the interest component on the balance. this was the balance at the end of the year before an installment. So we calculate the 25% on this. Is this clear? So the 25% interest on this will give us an amount of 8,062.5. Okay, so that is on 31st December. We have high purchase interest of 80,062.5. So to the nearest whole number, 80,063. All right. So we have to close off this account because the year has ended. So in closing of this account, the total is 40,313. So 40,313. 40,313. So at the end of the year, the balance carried down will be an amount of 16,313. 16,313. Okay, so we move to a subsequent year, that is 2021. But before we move to the 2021, remember that for 2020, the high purchase interest, okay, will be an income to Never Again Engineering. So we come and credit this account for 2020. At the end of the year, there was a high purchase interest received from Joe Limited, and the amount is 80,063. Very good. So for the year 2021, this balance carried down becomes the balance brought down on 1st January. Okay, so we have the balance brought down of an amount of 16,313. Okay, and from the question we can realize that there was a final installment being made at the end of the year of an amount of 20,391. So that is at the close of 2021, there was a final installment. But remember, all these installments are from the bank. Okay, they are against bank. So it will be debited to the bank account of Never Again. So final installment, and the amount is 20,391. Is this clear? And this final installment is being made at the end of the year. So we have to calculate the interest component on the remaining balance at the end of the year. So we calculate the interest on this. 25% on this will give us 4,078.25 when we multiply this amount by 25%. So at the close of the year, that is 31st of December, you have the high purchase interest, and the amount is 40,078.25. this to the nearest whole number. So we have to close this account. But before we close the account, remember that in a high purchase contract, okay, at the end of the year there shouldn't be any balance, okay, with the debtors account, or there shouldn't be any balance with the high purchases account, okay, because the payment will be made at the end of the final year. All payments will be made at the end of the final year. If that is so, then there shouldn't be any carry down. Okay, so to balance off this account, we have 20,391. 20,391, meaning there is no balance CD or balance brought down. And because of this, at the end, this very stage, the high purchaser, who is Joe Limited, can take or can have an ownership of the packaging line, or can have an ownership. Is that okay? Good. Remember that this high purchase interest over here is an income to Never Again. So for 2021, on 31st December, there is an interest received from Joe Limited of an amount of 44,078. Remember, we are making an accounting arrangement in the book of Never Again, and we will be preparing the trading account of Never Again in order to determine the gross profit on the sales. So this interest will be transferred to the gross profit as other income. So that is for 2019, that is on 31st of December, we transfer this to HP, that is high purchase trading account, that is 11,250. The same in 2020, that is at the close of the year, we transfer the high purchase interest to high purchase trading, and the amount is 8,063. For 2021, at the close of the year, we still transfer to a high purchase trading, and the amount is 40,078. So we've closed this account. Very good. And also take note that this sales will also be transferred to the high purchase trading account. So to transfer that is this amount to be transferred at the end of this year. So that is January 19, 31st of December. We transfer this amount to high purchase HP trading, and the amount is 54,000. So we close this account as well. So remember, when we are preparing the trading account of Never Again Engineering, for each year we'll be transferring this amount. Okay, we transfer the sales, we also transfer the cost of manufacturing the package line to the trading account, then we compare with the sales to determine the gross profit. Okay, so that is what we will be doing. So don't forget of this amount. This interest will be transferred and this sales will be transferred. So I'm going to clean the board, then we open the high purchase trading account and see how the accounting arrangement will also look like. Okay, so let's look at the preparation of the trading account. Okay, and the trading account will be prepared for each year. Okay, and the years we have 2019, 2020, and 2021. Is that okay? So for the trading account, what we'll be doing is that we will just transfer amounts. Okay, we transfer the selling price and the cost price, then we compare to find the gross profits. Okay, but at any point in time, if there is any amount on due that is not yet paid, we need to make a provision for unrealized profits. So we have to calculate the unrealized profit on the remaining balance. So I will show you how we do that. Okay, so let's look at the transfers. So this is the trading account, and the selling price of the assets will be transferred from the high purchase sales account. We have high purchase sales, HP sales, and the amount is 54,000. Okay, 54,000. Then we compare with the cost. So we have high purchase HP cost of sales, and this cost of sales is directly from the question. Okay, that is the cost of manufacturing the packaging line, that is 43,200. all right, so with this we should be able to determine the gross profit. Okay, but also remember that there is an interest at the end of 2019. There is an interest received from Joe Limited, and that is an income to Never Again. So we know that interest received is part of other income that's supposed to be added to a gross profit when we are preparing the income statement that is the trading account area. So we also have high purchase interest. High purchase interest. High purchase interest. Now this is high purchase interest receivable. Is that okay? And the amount is 11,250. And remember that this amount is transferred from the high purchase interest received account. We are just transferred, because when we prepare the high purchase interest received, at the debit side, you can see that I've just cleaned it. You can see that we debit it in the name of high purchase trading account. So we are just transferring. Now I want to determine the gross profit. Okay. So to determine the gross profit is determined by lessing cost of sales from the sales. So when we less the cost of sales from the sales, then we arrive at 10,800. This should be the gross profit. Okay, but remember that at the end of 2019, there is part of the amount that are not fully paid. Okay, that is this amount. For 2019, you can see that there is a balance carried down of this amount. Okay, that is not yet paid, and there is a portion of the gross profit in this that is not yet realized. So we need to calculate the provision for unrealized profits. So the formula for calculating provision for unrealized profits: HP debtors over HP sales multiplied by the gross profit. But this high purchase debtors is the balance unpaid, the remaining balance, or the amount due unpaid. So that is the carry down. Okay, so to determine that, we have 32,250 over the high purchase sales. The high purchase sales is 54,000. So divided by 54,000 multiplied by the gross profit. And this will give us an amount of 6,450 as the provision for unrealized profits. Is this clear? Very good. So this is the provision for unrealized profits, and this will be credited to the 6,450 will be credited to provision for unrealized profit account. Then we debit it to the high purchase trading account. So provision for unrealized profit. Is that okay? And the amount is 6,450. And you know how we came by this. So we need to close off the account, or we need to balance this account. So in balancing this account, the total is 55,250. So the debit will also be 55,250. So the profit on the high purchase trading for 2019, that is profit on HP trading for 2019 will be the difference between these two and that of this. That will give us an amount of 5,600 as the profit on high purchase trading for 2019. Okay, so when we come to 2020, okay, this provision for unrealized profits, okay, for 2019 is the carry down, okay, the CD, the balance CD. It will become the balance brought down for 2020. Okay, so provision for unrealized profit, but this is brought down. Okay, so and the amount is 6,450. Very good. And you have to also remember that for the year 2020 there is an interest received. Okay, that is for the year 2020 there is an high purchase interest received, an amount of 8,063. So that is HP interest, and the amount is 8,063. So we also have to determine the unrealized profits on the remaining balance that are not yet paid at the end of 2020. Okay, so you have to calculate provision for unrealized profit on it. So to do that, what we do is that we take the debtors for the remaining balance for 2020. That is the balance carried down is 16,313. So provision for unrealized profit, that is for 2020, becomes the debtors balance over the high purchase sales multiplied by the gross profit. The gross profit was 10,800. That is where we take the cost of sales from the sales. Is this clear? And this will give us an amount of 3,263. That is to the nearest whole number. So we have provision for unrealized profits carried down of an amount of 3,263. Is this clear? And now we have to determine the profit on the high purchase trading for 2020. That is the true profit. Okay, so to determine that, we balance off this account. So to balance off this account, we have the totals. Okay, so this will give us 14,513. 14,513 this way. Okay, so now the profit, the true profit of the high purchase trading for 2020 becomes 11,250. That is where we take this carrying amount of the provision for unrealized profit from the total to get this amount. Is this clear? Now we move to the final year, that is 2021. So this provision for unrealized profit carried down becomes the brought down for 2021. Okay, so we have provision for unrealized profit. This is brought down. Is this clear? And the amount involved is 3,263. Very good. And after recording the provision for unrealized profit brought down, you have to remember that there is an interest received at the end of 2021, and that interest received here is an amount of 4,078. That is high purchase interest received for 2021. That should be credited. So high purchase interest received, and the amount is 4,078. Okay, now we have to close off this account, but remember that for each year we normally calculate the provision for unrealized profits. We do this just because at the end of the year, if there is a portion of the debtors balance that is not yet paid, we base on that and calculate the provision for unrealized profits. But if there is no balance for debtors at the end of a particular year, we won't calculate provision for unrealized profits. Is that okay? So you can see that at the end of 2021, there is no balance, there is no closing balance. Okay, you can see there is no carry down, there is no brought down, meaning that the Joe Limited, who is the debtor, has fully paid the cash cost price at the end of 2021. So there will be no provision for unrealized profit for the year 2021. So we need to just close off this account in order to determine the profit on the high purchase trading for 2021. So this will give us 7,341. This will give us 7,341. Then the difference here will be the profit on HP trading. That is 7,341. Okay, so this is the profit on high purchase trading for the year 2021. So this amount wasn't clearly shown at the initial stage, but for now I can see, you can see it on your screen by now. And what I need to tell you is that, you see, at the end of this high purchase contract, okay, the total profit made by Never Again Engineering will be the high purchase, will be the profit on high purchase trading for 2019, for 2020, and for 2021. Okay, this will be the total profit, okay, at the end of the high purchase contract. And when you sum these three up, it will give you an amount of 24,191. So this will be the total profit made at the end of the high purchase contract. So basically, this is how we make an accounting arrangement for a high purchase transactions in the book of the high vendor. Okay, so in our next video, we'll be taking a question on how we make an accounting arrangement on a small and a less valuable items. Okay, when the items are of low value and they are not considered as assets and treat them once, we look at how we make an accounting arrangement for them. After that, we also take a question on how we make an accounting arrangement when there is a repossession. The repossession has to do with where the high purchaser failed to make any of the installment payments. The high vendor has the right by law to seize the item or to take over the item or repossess it. Okay, and no payment will be made back to the high purchaser just because those payments he has made will be treated as a rentals. Is this clear? So basically, this is how we make this accounting arrangement. If you haven't subscribed to my channel, I will encourage you to subscribe to this channel. Turn on the notification bell so that any moment I upload any new video, you will get notified on your devices. Until we meet for next video, I think it is bye for now.